Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, November 11th, Veterans Day. The year's 2019. Let's talk trading. First Principles Trading, Part 4. I read an article over the weekend, and it was about this guy who invested or speculated, traded some cryptocurrency. And he took his entire family's life saving, him, his wife, his kids, $100,000 that they had saved up for the kids' college and, their retirement future. And he bought some cryptocurrency. And he turned that $100,000 into something like $40,000 because it went against him. But he believed, so he mortgaged his house for another $200,000 and bought in. I'll make a long story short. He cashed out somewhere, I think it was $13 million, $10 million after taxes or something like that. What's the moral of the story? The moral of the story is when you win, it's luck. Now, he wanted to argue that it wasn't luck because he did his research. But boys and girls, fellow traders, once you enter the trade, what happens next is up to the market. You cannot control what happens next. You can't control the direction. You can't make price go up or you can't make price go down. The market's going to do what the market does. And if the market smiles upon you and gives you the opportunity to take profit, that was luck. Take it. Put that money in the bank or in your portfolio, cash out, exit the trade, and then move on to the next trade. Now, one of the reasons I mentioned this story is because I received an email from a trader that was saying, they did a wick zone trade. And I guess the first one, they made 8 pips. So they were 8 pips ahead of the game. But the next one, they lost 16. Now, they were asking questions about, the win-loss rate of the wick zone. But you see, you're going down the wrong path, in my humble opinion. What you need to look at is your money management, because you were up and then you let yourself get to a position where not only did you lose the profit, but you then lost part of your original principal. That's a no-no. So if you were willing to have a 16 pip stop, and maybe that was the amount you were willing to lose per trade, but you see, you were already up. So the question is, maybe you might have wanted to change your position size, decrease it so it gave you an even wider stop. Or maybe as you saw your profit dwindling, your overall account size dwindling, and obviously the market is going against you, maybe you would have scratched the trade and kept your 8 pips, or maybe you would have risked 4 out of the 8 and then been up 4 when you close that trade. So it really gets down to your risk and money management, okay? Because you have to be paying attention, to this. But you see, that's the money management side. Risk, I consider that. That's the losing side. The money management side, that's when you're winning. You have to manage your winnings, okay? And don't think of it as house money. That's the worst thing you can do. It's not house money. Once you close the trade, it's your money. And you have to treat your winnings just the same, if not even more precious than your original stake, your original principal, your original portfolio size. And so if you can do that, then you'll be on your path of success. Okay? But boys and girls, you know that these videos are for educational purposes only, and your results may differ from mine, and that trading, forex trading, stock trading, currency trading, commodities trading, metals trading, it's all very risky, and you can lose your entire portfolio in the blink of an eye sometimes. So that's why when you're seeking advice, financial advice, you need to seek it from an accredited financial professional. That way, if and when you lose your money, you know you got your advice from an accredited financial professional that had all the certificates and degrees rather than just somebody you heard on YouTube or some other internet channel or forum. Okay, so what do we have here? Once again, first principles. You can't make price go up. I cannot make the dollar yen go up from here. Dollar yen, you can see right here on this 15-minute candle, it's going down. Okay. And you can see here it broke through the previous day's low. And you know that's a trade, one of the trades I like to make. As you see here, we got these three lines, the current day's open, the previous day low, the previous day high. These lines aren't going to change. It doesn't matter what time frame you put them on. Those values are going to stay the same. You see that? Because price is the same on all time frames. So does it matter what time frame you look at? Well, yes and no. I mean, you can see certain how price reacts, you know, at the granular level here. If you come all the way down to M1, so you can see right here how many times price moved up over that level. And you can see right now it's right back here at this same level, okay? And you see it moved up there once, twice, three times, hit it below, but then another move up. And as you can see right now, it just moved up a couple of pips. So that's why you may want to look at the different time frames just to get a reference. Okay, so let's move on. Weekly, we still have three pairs that haven't filled the weekly open gap. And dollar yen's 14 pips below the weekly open. You see here it dipped down to the pivot point and then reversed here on the weekly, took out that weekly pivot. I think I mentioned that yesterday. That was something to look forward to. 59 pips below the yearly open. And we're still putting in the opening, the Monday or first trading day of the week range here, okay, which is in the first trading day of the month's range. So it's going to be real interesting considering that first trading day had a 101 pip range. And you can see how many opens we are above and how many we are below. And the ranges, which ones we're in. You see here, August, we came back through that. We had broken out of that August high, but now we're back down inside it or below it. And here we had a nice inside bar trade. Now you can see we're 2 pips above the previous day's low, but there was a nice trade there, about 16 pips. Still plenty of inside bars to take a look at. And you know, it's kind of funny because I'm still getting these emails from these various trading marketers trying to sell me their dashboards, and it's pretty funny. It just really is because, you know, they're trying to, this one saying, well, you know, you only buy these pairs, you only sell these pairs, blah, blah, blah. And then you get this other indicator all for a whopping, you know. And it's like they keep wanting you to buy a different indicator every day. It's just like, well, if the yesterday's was any good, why do you want me to buy today's? You know, but that's what happens when you get those squigglies. Okay, here we go. We've got 6 pairs over with range over 100 for the day. Once again, showing that breakout of the dollar yen to the downside. Here's a weekly H1 lowest open right here, 3 hours ago or so. You can see where the other lows and highs are, places to look for price to reverse. And here we still missed today's pivot. We went down to that daily low, but you can see here we just came back into the short zone and then fell back out again. And there's that magical VWAP that price likes to head towards. Not enough range for rats. And you can see here we did take out that weekly pivot. Now remember yesterday it was somewhere around here when I said, let's see if we can take out that weekly pivot. I don't know if anybody took that trade or not. Missed pivots, you can see 3 so far this month, and the month's trading days, what? This is like trading day 7, and we've missed 3 out of 7. Price action, once again, doesn't like to stay between these lines. You see here 1, 2, 3, 4, 5, 6, 7, 8. Finally, it broke out here. Actually, it broke out there, but price just doesn't like staying between the lines. Wick zone, in and out. Okay, it came back in, came back out, and it's still coming back out right there. Right there. Previous day's low. Crisscrossing that line, you've seen that. Now you might notice that those lines appear on more than one chart. That's just because that's how much importance I place on them, that I always want to be looking at those lines because that's where price can turn or break. And usually it's a nice move. Here on the Einstein line, you can see nothing much happening at the moment. I guess the traders will be getting back from lunch in New York soon, or maybe just heading out to lunch. Come to think about it, it's almost noon in New York, and you can see prices in all these different wick zones. It's, this is a work of art. You could almost call this a chart on drugs. And those are usually the ones where you can barely see price. But it's just we have the wick zone shaded here. I don't remember which is which, but we'll find out here. High, low, 2 bars, current. I don't even know if I changed the if I changed that comment. That was a nice idea. A trader said, hey, can I have a spot here when I'm using more one so I can tell what that indicator's doing? I don't have to read it. Let's see, shade, right day, previous day bar, shade wick zone. You see, we can turn this off right here. And we can turn another one off so it won't look so crazy. Shade wick zone, false. So you can see here we just have the weekly wick zones shaded. So it takes some of the craziness off of the chart. And looking here at our ATR chart, where everything is, rather than distance in pips, we do have distance in pips here, but we've got the ATR. Now here was our open. It actually made it to the ATR, the max ATR here. ATR 8, half of it came here, actually crossed it and then reversed. So remember, we had a reversal here, a small one, but it did reverse. And then once again, we had a reversal here, and we had a cross and cross back. So showing those ATR, half the ATR ranges work. Okay, fellow traders, just remember when you're trading, it's not what you trade, it's how you trade it. So go out there and drain the banks.